Finding stable, scalable digital money in crypto,
Okay.
it's been a huge challenge, right? Kind of the holy grail.
Definitely. A lot of projects have tried to crack it.
Yeah, exactly. So today we're doing a deep dive into one contender, Ethena. That's Ethena. They're trying to tackle this specific problem.
That's right. We've been looking through the info Ethena put out themselves about their project, this USD synthetic dollar, the ENA token, and their plans for the future.
Okay, so our mission here is pretty clear. Figure out what Ethena is, how USD works, what the ENA token actually does, and where they're headed.
Let's get into it.
So Ethena Labs created USD. They call it a synthetic dollar protocol on Ethereum. Now, synthetic, that sounds different from just holding dollars in a bank. What makes USD synthetic, and what's the big problem they're trying to solve?
Right. Good question. So yeah, unlike, say, USDC or others that hold actual dollars, USDD aims for its dollar value using crypto-native strategies. The synthetic part means it's backed and stabilized by crypto assets and derivative positions, not directly by fiat in a bank account.
Ah, got it.
And the core problem, it's that need for crypto money that's stable, can scale up, but doesn't rely on the old traditional banking system, cutting those ties, essentially.
Makes sense. For a truly decentralized future, you kind of need decentralized money, too.
Exactly. If everything else is on-chain, why should your stable money depend on an off-chain bank?
Right. Okay, so that's USDE. But then there's the ENA token. What's its job in all this?
ENA is all about governance.
Governance, so voting.
Pretty much. If you hold ENA, you get a say in how the Ethena protocol evolves. We're talking decisions on, like, risk management, new collateral types, where treasury funds go, that kind of thing.
So putting the control more in the hands of the users and holders.
That's the idea. Decentralized decision-making, core crypto principle.
Okay, let's talk numbers for the ENA token. The info we have from late March 2024 mentions a total supply of 15 billion ENA. That sounds like a lot.
It is a big number, yeah. Often, a large supply like that helps with, wider distribution. Makes it easier for more people to hold some.
Right. Granularity.
And the initial circulating supply was much smaller, about 1.425 billion, so roughly 9.5% to start. And it's an ERC20 token, lives on Ethereum.
Standard Ethereum token, got it.
Thanks.
And there was that Binance launch pool thing too, right? 300 million ENA.
Yeah, 2% of the total supply. That kicked off March 30th, 2024. It's a way for Binance users to farm the new token by staking other coins. Gets the token out there initially.
Okay, so USD is the synthetic stable. ENA is for governance. The source material also mentions things like staking USD and peg arbitrage as existing products. How do those fit in?
Yeah. Those are important for how USD functions day to day.
Right.
Staking USDD, well, it generally means you lock up your USDD and you can earn yield or rewards. It incentivizes holding USDD, which helps stability.
Okay, so holding is encouraged. What about the arbitrage part, peg arbitrage?
That's crucial for keeping the price close to $1. If USD, say, dips to 99 cents on one exchange, an arbitrager can buy it cheap there, sell it maybe closer to $1 somewhere else, and pocket the difference. That buying pressure pushes the price back up.
And presumably the reverse happens if it goes slightly above $1.
Exactly. Selling pressure pushes it back down. It's a market mechanism that helps enforce the peg. Automatically, you could say.
Clever, built-in market incentives. Okay, now what about the overall distribution of all these ENA tokens? Who got what slice of the pie?
Right, the allocation. So we mentioned the 2% for the Binance launch pool. Then 25% went to investors, the early backers.
Okay, standard.
The team got 30%, which is pretty common, often vested over time to keep them aligned.
Sure.
There's 15% for the foundation, likely for long-term protocol health and growth.
Yeah.
And the biggest chunk, 28%, is for the ecosystem.
Ecosystem. So like future rewards, grants, partnerships.
Yeah, exactly. Things that fuel growth, user adoption, that sort of stuff.
Got it. So quite spread out. Now, roadmap's always interesting. What have they actually done so far? Any big milestones hit?
Oh, yeah. They've been busy. Back in Q4 of 2023, they did their pre-launch, kind of a closed beta for investors, and hit their first $250 million in USD supply.
Okay, solid start.
Then Q1 of 2024 was pretty packed.
Wow.
Public launch in February. They ran these shard campaigns, probably for user engagement, maybe a point system. Got significant liquidity onto Curve, $150 million. Did huge volume on Uniswap, like $1.5 billion.
Yeah.
Saw lots of USD locked in Pendle too, showing people were using it in DeFi.
So really integrating into the existing DeFi space.
Definitely. And then the big one we already mentioned, the ENA token launch itself on April 2nd, 2024.
Right. So a very active start to this year. What about looking ahead? What's on the current roadmap for the rest of 2024?
Okay, Q2 2024, which we're sort of past parts of now.
Yeah.
The token launch and listings happened. The really interesting thing planned was onboarding Bitcoin as collateral.
Whoa, okay. Bitcoin as collateral for a stablecoin.
Yeah.
That's different. Most use fiat or other stablecoins.
It is different. It's a big step. Bitcoin is, the biggest crypto asset, super liquid, very decentralized. Using it as backing could really scale USDD.
But it's also, well, volatile, right? How do they manage that risk?
That's the key question. They'll need really robust mechanisms. Things like over-collateralization, needing more than $1 worth of BTC to back $1 of USDD, and probably sophisticated hedging strategies using derivatives, which seems to be part of their core model anyway.
Right, the delta hedging aspect they talk about. Okay, makes sense they'd need that. What else in Q2?
Kicking off Season 2 of their incentive campaign, so more rewards likely, and starting the rollout of DAO governance.
So ENA holders actually start voting soon.
That's the plan. Transition control.
Okay, what about further out? Q3.
Q3 plans include adding SOL, Solana, as another collateral asset.
Diversifying the backing.
Exactly. Spreading the risk, tapping into another major ecosystem. And they're looking at USDD cross-chain initiatives, making USDD usable beyond just Ethereum.
Taking multi-chain. Makes sense for adoption. And Q4.
Q4 is slated for the end of that Season 2 incentive campaign. And then, interestingly, a second ENA distribution after that campaign finishes.
So maybe another airdrop or reward phase for participants.
Seems likely. Rewarding ongoing engagement in the ecosystem.
Okay, so the big themes for the rest of the year seem to be expanding collateral big time with BTC and SOL going cross-chain and handing over the reins via DAO governance.
That sums it up pretty well. Aggressive growth and decentralization.
And if listeners want to follow along, maybe get involved, where should they look?
Ethena has all the usual channels. Their official website is the main hub for info. Then there's Twitter for updates and active communities on Discord and Telegram for discussion, and LinkedIn, too, for the more professional side.
All right, so let's just quickly recap our deep dive here. Ethena is building USD, a synthetic dollar aiming for stability and scale without relying on old-school banks.
Right, using crypto-native backing and mechanism.
And the ENA token gives holders governance power. We saw the tokenomics, the distribution, their progress so far.
Hitting some big DeFi milestones.
And this really ambitious roadmap for 2024, bringing in Bitcoin, Solana, going cross-chain, and launching the DAO.
Yeah, those next steps, especially the collateral expansion and the DAO, are definitely ones to watch. Could really shake things up.
Absolutely. So maybe a final thought for you, the listener. As we watch projects like Ethena push the boundaries, what does it really mean to have stablecoins backed by things like Bitcoin? Is that the future, or does the volatility introduce too much risk? And how effectively can a DAO truly steer a complex financial protocol like this? Definitely some big questions to chew on as this whole DeFi space keeps evolving.